everyone, and in this video we're going to wrap up the chapter 3A exercises, which will help you with the B exercises that are assigned to you in McGraw Connect. The first exercise, 3-6A, we are going to look at an employee that earns commissions if he sells over $150,000. He receives 2% commission. However, $1,500 of those returns were brought back to the company. So the company policy requires that he returns the commissions on the sales return. So what is his gross pay for the week? So if he's paid $10 per hour multiplied by 40 hours, his regular pay would be $400. His commission then would be $163,000 multiplied by 2%, because remember that is the rate that he's paid. So his commission would be $3,260. Less the commission that he needs to return for the canopies that were returned to the company. So if he's minusing $30 off his commission. So $400 plus the $3,260 minus the $30, right, from the commission for the canopies that were returned. His gross wage for that week would be $3,630. So please make sure you really watch the wording on the problems for chapter 3 to understand exactly what percentage they're paying on commissions and also on the returns. On exercise 3-7A, Kathy's an outside sales rep. She receives 10% of commission on all new subscriptions she receives in her sales territory. This week she sold 5,000 of new subscriptions and worked 40 hours. What is her gross pay? So 5,000 times 10%, right? Because that's 10% of the commissions. Her gross pay would be $500. Is she subject to minimum wage law? No, she is not. The reason being is, remember back in the PowerPoint slide from chapter 3, outside sales representatives are exempt from the minimum wage regulations under FLASA. So please make sure you do understand that in regards to chapter 3 for sales representatives. And that is covered on page 91 in your book. The next exercise is 3-8. Okay, the telemarketer, they receive $15 commission on all new customers they sign up for. Each telemarketer works 40 hours. The company ran a competition to see who could send the most people up that week, and the winner would get a $50 bonus. Since the employees are paid slowly on commission, the employer must ensure they earn the federal minimum wage of 40 hours each week. Okay, so we need to compute the gross pay for each of the following outbound sales representatives. All right, so Kenny did 22 customers, so his commission would be 22 times 15. So his commission is $330. Difference between commission and minimum pay is not available, so his gross pay would be $330. Charles signed up 18 new customers, so 18 times 15 is 270. 290 is the minimum wage minus 270, so the difference between commission and the minimum wage is $20. So $20 plus 270, his gross pay would be $290. Lori signed up 29 customers, so 29 times 15, $435. Her gross pay would be $485. Since she is the #1 sales representative, she would get an extra $50. Okay, so she $435 plus 50, she would get $485. Phyllis had 16 customers, 16 times 15 is $240. The minimum pay wage is $290. So $290 minus $240 is an extra $50. So the employer would pay her $50 in order to meet the minimum wages for that week. And remember, in chapter 3, the minimum wages for each state does vary, and that's located on page 85 in your book. The next exercise is 3-9A. This is the piecework. If an employee has a standard 40-hour work week, what is their effective hourly rate based on FLASA minimum wage we need to calculate each employee's minimum weekly pay. All right, so Mark did 25 hauls. The rate per item is $10. So 25 times 10 is $250. The gross pay is $6.25 per hour. The minimum pay is $290. The difference the employer must pay is $40. Okay, so it's the $290 minus the $250 equals $40. Richie had 70 seat covers. The piece rate item is $15. His gross pay is $1,050. He makes $26.25 per hour. The minimum pay is $290. There's no difference for the employer. Tony did 45. The rate per item is $4. So 45 times 4 is $180. His gross pay divided by, so is 180 divided by 45. His rate of pay is $4.50. The minimum pay is $290. So $290 minus $180. The employer would have to pay a difference of $110. All right, so please make sure you understand the piecework. It doesn't happen, I don't believe, in any employer that I know around the Wausau area, but it could take effect in regards to other places around the state. All right, exercise hash 10A. This is in regards to tips for the waiters. He's a waiter in a place in Delaware. He receives standard tip hourly wage. During his 40-hour work week, he receives $160 in tips. So calculate the following. His wage for the week would be 40 hours. And if you look on page 86 and 87, in the state of Delaware, the tip rate is $2.23. So $2.23 multiplied by 5 hours. Okay, so $2.28. This rate is found on page 86 for the state of Delaware. So his weekly rate is $89.20. His gross wage then would be the $89.20 plus the $160 in tips. His gross wage would be $240.20. The minimum wage for Delaware, which is located on that same page, is $7.75. Multiply it by 40 hours. The minimum wage that he should be earning is $310. So in order for the company to meet FLASA requirements, the company must pay the difference between $310 and $240. So they would pay the difference of $60.80. Once again, remember these charts are found on page 86 and 85 in your book for each state. If you have any questions in regards to these concepts, please send me an email or give me a call and we can walk through it in a conference webinar that is located in Blackboard. All right, exercise 3-11A. Grace is a salary non-exempt administrator for her company is paid bi-weekly. Her annual salary is $48,000. Her standard work week is 35 hours. During the pay period, she worked 8 hours of overtime. All right, so 48,000 divided by 26 pay periods within a year, her regular wage is $1,846.15. Since she is non-exempt, she is eligible for overtime. So 1,846 divided by 70 hours per pay period, multiply it by time and a half, multiply it by 80 hours of overtime. Her gross pay, the overtime plus her regular wage, is $2,162.63. The next exercise is 3-12A. This employee is an administrative assistant for her employer. At the end of her shift, the employer requires her to deliver a package to a customer before traveling home. She spends 2 hours of driving to the customer's site and 3 hours driving home. How much of Natalie's travel time is compensated? 2 hours she would be paid for because it is in regards to travel time for her job. So she's paid for travel time to the customer site. She is not paid for the time going home because technically she is off the clock. The last exercise in chapter 3, Colin is an 18-year-old worker in a receiving department for a company. On his first paycheck, he notices he receives $170 gross pay for 40 hours. Did his employers pay him correctly? Yes, because an employee, remember, that is less than 20 years of age may be paid $4.25 per hour for the first 90 days of employment. All right, and this is found on page 101 in chapter 3 as a reference. All right, if you do have any questions in regards to the exercises in chapter 3 in the A section, please let me know. Otherwise, have a great week.